Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be your daily cryptocurrency market update. For those of you that are new around here, every single day at 1 p.m. UK time, we bring out a update where we try and navigate the treacherous waters that are the cryptocurrency market and the broader macroeconomic whirlwind that it finds itself in, and certainly has found itself in, from kind of March 2020's crash onwards. We've largely been driven by things going on elsewhere and not what's internally going on with our small but extremely significant and about to become a lot more significant market. And we really try and work out what's going on. And we're going to be giving a little bit of foresight into a number of things in this video. We're going to be reiterating our stance because I am still bullish over the next 3 to 6 months. And this was a stance that we took on the 5th of January. It's paid off for us thus far. And we actually do believe that there's a very good chance, this market, certainly Bitcoin, goes above and beyond 30k within the next 3 to 6 months, and thus the altcoin market largely follows along. But it's largely dependent on the kind of macroeconomics. We've seen really markets be very stagnant, very little movement, very much closed last night where they opened on Monday morning, whether it be the UK. All markets are very kind of stagnant at the moment, and that's because we've got a pretty heavy week this week with economic data, which we've covered on Sunday's video. But just today, we've got the Fed Chair Jerome Powell speaking at Capitol Hill, testifying at Capitol Hill in regards to economic policy, his decisions and where he's sort of looking at, or what he's looking at moving forwards. And this is going to move the market. So this is going to be important to watch, something I'll personally be watching. We always do not recommend that people trade these kind of events because they can be very volatile. Jerome Powell is the market manipulator. He is the market maestro. And what he says will impact the markets. Now, this article is looking at a number of things that he's going to go into. We will be watching this, but more importantly, we're going to be watching the market's reaction. So we're going to be looking at how markets are pricing in the rate hike that's coming on the 22nd of March. And also see if there's any sort of full guidance to the CPI that we're going to get on the 14th, which isn't this week, it's next week. We can see that, and we did say this, whilst you're in this kind of no man's land, markets will lean towards downside. It's just how it goes. Altcoins are suffering massively under Bitcoin's sort of pullback. And this is a pullback until it isn't. But I do expect continuation out of it. It's the hard, if you look at a flight, for example, it's usually very sort of touch and go. It's not really touch and go, but it's usually, the dramas at the start of the flight and the end of it, right? The taking off and the landing. Investing is quite similar. When you first initially put money back into a market, it takes a little bit of time for that position to be confirmed or, as the right decision or the wrong. But the journey in the middle is really what I think is to come. I think right now you're still at that sort of takeoff stage for the cryptocurrency market. But again, it's largely going to be dependent on the kind of macro. Asian market didn't really do a lot. The dollar is finding a little bit of strength. It's an interesting one because the dollar has actually broken out of its basement. And actually, this structure is not that bad for the dollar. The one thing that I'm watching probably more so than anything is the 2-year yields. And does this actually decide to climb? Now, this doesn't look too bad at all right now. I wouldn't like to see this set up some sort of continuation structure, but it may. But we'll be watching it all. It's largely going to depend on Jerome Powell's speech. We know that he's likely going to be very hawkish. There's a bit of foresight because obviously we've had the higher inflationary prints and that's going to drive him. We'll look at a little bit of news as well. Grayscale are coming under quite a lot of questioning at the moment. Obviously, what happened with Genesis. You've now got Alameda sues a Grayscale DCG Silver over fee structure. We'll look at that. But this is really, it's not going to be too much of a sort of video where we go over what we haven't already covered. Because for me, it's just a sitting and waiting game at the moment, waiting to see if we're invalidated, waiting to see if we're validated. And that's all dependent on the price and ultimately the kind of economic data that we're going to get. So the Fed Powell heads to Capitol Hill this week, and he's going to have his hands full. The Federal Reserve Chairman Jerome Powell appears before Congress this week as part of a seminal testimony on monetary policy. Democratic legislators in the past, in particular, have been worried that Jerome Powell's risks dragging down the economy with its determination to fight inflation. So is there going to be any let up in that? Are we going to get, sort of quotes like coming out of this, we're mindful of the economy, or are we going to get quotes like, yeah, our main priority is to continue to fight inflation. Until we do that, we're not going to stop. We will see. Markets also have been torn between wanting the Fed to bring down inflation and being worried that it will go overboard. They will, and I would argue already have gone overboard. You can see this in the debt markets and some of the sort of catastrophic, look at European bankruptcies. I know that's the ECB, but look at, some of the alarming metrics that we're seeing. All a symptom of high rates with high inflation. But yeah, there's quite a lot going on across the board. And what Jerome says today is really going to be pivotal going into tomorrow, and then going into, of course, on Friday, we have the non-farm payroll, which, of course, set the dollar on a bit of a path. This is some interesting news. BlackRock says European companies are showing surprising resilience and better value than the US. The Wall Street giant highlights in a note Tuesday that European fourth quarter earnings showed corporate health extended beyond the region's bedrock sector of banking and energy. So it is a gloomy macroeconomic picture, but there are some really sort of strong outliers within that. And Europe, the US is getting smashed. The US is hopelessly overvalued across the board. As a kind of consumer nation as well in this kind of high inflationary time, that's not really great. However, the US really has stayed afloat with its sort of dollar dominance or dollar domain. And actually, we are seeing a huge shift. We're going to do videos on BRICS and all this kind of interesting stuff away from the dollar, as people are just simply fed up with it at this point. So this is the plan. We'll see how markets react to JP. Remember, the markets to watch really are the yields, the dollar, and of course the equity market and how that reacts to all of it. But it's likely if the dollar's strong, that equities will be down, and so on and so forth. Yields is a big one for me. Like I say, we're not really getting any full guidance into this. If you look at Bitcoin sort of price action, it's just like, what do you take from that? You just take that it's very low volume and that markets don't really know what they want here. You've had a sell-off, sell pressure exhausted, and now you're just waiting for a direction to be taken. I think JP is going to help that. Remember, you got levels down here that we're looking for, potentially for the fibs, and then we've got invalidation points. And of course, we're still have a positive outlook on the cryptocurrency market over the next 3 to 6 months, regardless of a lot of what's being sort of thrown around right now. It's interesting because this was actually at 30% of people looking for a 50. It's dropped a little bit. I wonder what's caused that. And there's lots going on internally still with the cryptocurrency market, with regulations and stuff like that, which we actually think is a massively bullish thing for this industry and is actually going to propel it from the measly, where are we at in terms of a market cap? Just under $1 trillion industry, all the way into the tens of trillions. So yeah, we will see, guys. Is this just a suckers rally, or is it the start of something more? We'll see. My best or sort of take on it is that I think this is part of something more, but we're yet to be validated on that or invalidated. I think there's a very good chance, for all the reasons that we've been mentioning over the past couple of months, that we see continuation of this move up. Until something like the yield curve plays out or something like that. I think there's been a lot of destruction priced in, and I think you've had a kind of, when pressure builds up, you relieve some of it. It's kind of like a sigh of relief with this. Very hated rally because it's been quite an obvious short thus far, but we will see. I do believe the cryptocurrency market is going well back above and beyond the $3 trillion mark. It's just going to be, a matter of when, not if, in my opinion. But we will see. Market's very much stalled in the same place. The thing for the total market cap, doing a little bit of TI on the total market cap, is you probably definitely got very, very thin. Yeah, you can see you've got basically no volume here at all. So actually with the coin market cap, if you can come and take this, you'll be back up to your sort of 1.7 trillions in no time. But there's a number of things that have to go along with this. You know, you really need to be observant of the macro. Jerome's going to give a direction on that later on, and you know the markets to watch. All I've got for you in this video, guys. You enjoyed the content, like as always, appreciate it. So as a comment, and I'll catch you all in the next one. Thanks a lot for watching. See you in the next.